Okay, so we all want to know how to make that retirement money last, right? Turn it into something we can actually live on.
Yeah, for sure.
That's what we're going to dig into today. We're looking at the National Life Group Zenith Income 10 Annuity.
Okay.
We're basing all this on materials from Diversified Insurance Brokers. But the goal here is to really understand how this annuity helps you build a solid income stream, one that's guaranteed to last and even has the potential to grow over time. Plus, we'll look at how it can protect you from any market craziness.
Sounds good.
So let's jump right in.
Yeah.
So what's the big idea here? How does this thing actually work?
Well, what's really interesting about this is that you're essentially making a single investment, but it's designed to potentially grow along with the market and also act as a kind of safety net. So you're not completely exposed if things take a downturn. The goal is to help you convert your savings into a reliable income that you won't outlive.
Right. Yeah, that's the dream, isn't it? And the materials here highlight a couple of ways this annuity can help you generate that income using what they call guaranteed lifetime income riders, or GLIRs for short.
Right.
You've got the max bonus GLIR, and then there's the split bonus GLIR. What's the main difference between those two?
So think of it like this. The max bonus GLIR is really laser focused on maximizing how much income you could potentially get in the future. Like the income activation bonus on this one could go as high as 200%.
Wow.
And that depends on when you choose to start taking those payments. But that can mean a lot more money guaranteed to you each month later on.
I see.
Now, the split bonus GLIR, it tries to give you a bit of both worlds. So you get a 5% bonus on whatever you initially invest right off the bat.
Oh.
And there's still an income activation bonus, but that one goes up to 175%. So it's more about finding a balance between seeing some growth right away and then also making sure you've got a nice strong income stream down the road. If you think you're going to need that income later down the line, that max bonus could be really appealing. But if retirement's kind of right around the corner for you and you want to see some growth now and then still lock in a good income for later, then that split bonus might be a better fit.
Gotcha. Okay, that makes sense. So once you do decide to activate one of these GLIRs, how does that guaranteed income part actually work?
Well, once you're ready to start taking income, the GLIR kicks in and gives you a regular payment. It's consistent. It comes in like clockwork for the rest of your life. And you usually get to choose between a level payment, which just stays the same over time, or you can pick an increasing payment, which bumps up by 2.5% each year.
Oh, okay.
Now, that increase keeps going until the total value you've built up that's used for the income is all used up. And then it just levels off at that higher amount. That's where it gets locked in. But that increasing income option, that's pretty interesting, right? Because it can help you keep up with, inflation and rising costs as you get older.
Yeah, absolutely. Keep pace with things.
Right. Exactly.
Now, there's this other feature that really jumped out at me, the income doubler. And it looks like both riders include this. So how does that one work?
Well, the income doubler is kind of like a safety net.
Yeah.
Just in case something happens down the line. So let's say that you become permanently unable to do at least 2 basic daily living activities.
Right.
This feature could actually double your guaranteed income temporarily.
Wow.
And that lasts for up to 5 years. So it's designed to give you a little extra financial cushion when you need it most, during a really difficult time.
Right. Okay, that's good to know. So beyond the guaranteed income, though, how does your investment actually have the potential to grow inside this annuity?
There's a couple ways that can happen. So you can put some of your money into what they call a fixed account. That gives you a more predictable rate of return. It's kind of stable and consistent. Or you could opt for one of the various index strategies that they offer, like they mentioned in the S&P 500.
Yeah.
And the interest you earn is tied to how well that index performs. You use some different methods to calculate that. There's the point-to-point approach, which it basically compares the index's value at the beginning and end of a certain period. Or there's the monthly sum cap, where your interest is based on the total of the monthly changes in the index. But there's a limit on how much they'll credit each month.
Okay.
The important thing to remember is that even if the market takes a dip, your money's protected from those losses.
I see.
So it won't go down because the index is performing poorly.
Gotcha. That makes sense. And what about those folks who are really looking for, the highest potential returns? The materials mention these rate boosters.
Right. Yep. So for an extra fee each year, you can add a rate booster to any of those index strategies.
I see.
What that does is it could bump up those cap rates. Those are the limits on how much interest you can earn.
Right.
Or it could increase the participation rates, which control how much of the index's gains you actually get.
Okay.
It's a trade-off,
Yeah.
You pay a little more for the chance to earn a little more.
Right.
It's all about how much risk you're comfortable with.
Right. Absolutely. Now, what if someone's a little bit hesitant to put in a big chunk of change all at once?
Well, for those who prefer to ease into it, the Zenith Income 10 offers this thing called dollar cost averaging.
Okay.
So you can invest a set amount on a regular schedule, maybe spread out over 12 months. That can help minimize the risk of investing a large sum right before, a big market drop or something.
Yeah. That makes sense.
Smooth things out a little bit.
Now, what about if you need to access some of your money? Let's say an unexpected expense pops up.
Well, good news is that starting in year 2, you can generally withdraw up to 10% of what you've accumulated each year without getting hit with a penalty. So that gives you some flexibility if, life throws you a curveball.
Right.
Plus, there are certain situations, like if you get a terminal illness diagnosis or need to go into a nursing home, where they might waive those penalties altogether and let you access more of your funds.
I see.
And this is important. When it's time to pass things on, your beneficiaries, they get the full amount of your accumulated value. No surrender charges.
Oh, wow.
And that could help them avoid going through probate.
Oh, that's good to know. So who exactly is eligible for all this, and how can we be sure the company offering it is, stable and reliable?
Well, typically, the Zenith Income 10 is available to people between 35 and 75 years old.
Okay.
And they do have a minimum investment to get started, $25,000.
Right.
And as for the company behind it, National Life Group, which includes Life Insurance Company of the Southwest, they have a long history in the indexed annuity world.
Right.
And they have strong financial ratings, which is always reassuring.
Yeah.
Yeah, it means they're likely to be around for the long haul.
Yeah. Peace of mind.
Right.
Exactly.
So as we've seen, the Zenith Income 10 is really trying to balance the potential for growth that's connected to the markets with some really important features that can give you that guaranteed lifetime income and, of course, those safety nets.
Absolutely. I think it comes down to finding that sweet spot between growing your retirement savings while you can, and then having that security of knowing you've got predictable income you can rely on no matter what. And the different options within the income riders, they really allow you to personalize it to fit your own needs and priorities.
For sure. So as you think about your own retirement plan and your risk tolerance and how much you need that guaranteed income, what really stands out to you about this combination, like the growth potential alongside that guaranteed income security?
Yeah.
It's definitely worth exploring more, based on your own individual situation. But thanks for taking this deep dive with us today.
Absolutely.
We appreciate you being here.
Thanks for having me.